Hello, I'm David Chaston, and it's good to be back with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of surprisingly strong labour markets in the US. American payrolls rose strongly in December, and the job counts for both October and November were revised higher as well. Almost 300,000 new jobs were added in December, significantly above expectations. The US economy seems to be on solid ground despite a troubling Chinese situation. And despite low wage growth of 2.5% a year, given inflation is very low as well, real wages are rising. Adding to the positive news, stocks in American businesses are falling. While that may show up as a restrained GDP growth, it also shows that excess inventory stress is not building. In fact, these results drew one Fed member to say that if growth picks up, the pace of rate hikes will need to as well. And while we're on vacation, the US SEC issued a staff report on how the credit rating agencies are performing, and they were not overly impressed, documenting evidence of serious conflicts. Hard to be convinced that the major credit rating agencies are any better than they were before the GFC. Certainly the staff of the SEC aren't, although they do say things are improving. This is important because better jobs report and rising Americans' consumer confidence is encouraging their households to borrow more. The incentives are there to grease the system. In China, inflation is rising. In December, consumer prices rose at the rate of 1.6% per year, the second highest pace in 2015. However, producer prices are still falling. Neither data was different to what markets were expecting, however. Although it is opinion more than news, it has been interesting to watch seasoned observers wonder whether President Xi is losing his grip on events. No doubt Central Committee members will also be wondering. And back in New York, the US Treasury 10-year yield benchmark has continued its fall and is now at 2.12%. Local swap rates have softened as well, but do not yet reflect the full Wall Street shift down. And crude oil just gets cheaper and cheaper. The oil price has fallen yet again and now just over $33 a barrel. That is now a 12-year low. In the past week or so, the US rig count has dropped sharply, down more than 5%. And the gold price has inched back down on the good US jobs data and now at $1,102 an ounce. The recent run-up does not look like it can be sustained. New Zealand dollar fell sharply against the greenback following the good US data and now at 65.4 US cents, but held its own against the Aussie, now at 94.1 Aussie cents. And it fell against the euro too, now at 59.9 euro cents. So these changes mean that TWI is now at 70.9 and back to where it was in early November. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.